Well, oil remains very much in focus. It is now on a run of daily increases, the longest since February. Let's check in with an expert. He's Stuart, global energy strategist at Piper Sandler. There seems to be no keeping oil down. Now, when it does decline on negative sentiment or negative views of global economic growth, it's only a matter of time, it seems, before it pops back up. Crude oil trading at the moment at 115 US dollars per barrel and change. That's the WTI price. Can these price levels increase?
Yes, they can. We think that we are still in the relatively early innings. I know that's not good news for everyone, but this is early innings for the driving season, early innings for refined demand increases. It is, we're afraid, going to get worse.
Why is there not a more vigorous response from OPEC or the U.S. shale producers? Are they capable of adding meaningfully to supply at this juncture?
I got to laugh when you bring up OPEC. I mean, we should just be done with that, right? OPEC has no spare capacity, period. I don't care what the prince says. The prince acknowledges himself that he doesn't have the spare capacity. So OPEC cannot do anything. That's why we no longer care about that. The shale is a whole different story. And you guys in Canada, you know the same story. We as shareholders, we as financial markets have told the shale oil companies, grow up, make money. Don't just wantonly keep on drilling for growth. And so in the last 3 years, these guys have changed their ways. And the pandemic hit them over the head with a 2x4. And now these companies are actually in the business of returning profits to shareholders. They are not set up to grow in the way that they once were because we didn't want them to be that way anymore. So it's going to take time to change.
Will that discipline stick, or will they be tempted to start drilling more holes with these very high gas prices? I guess you're arguing that the market will not reward companies that take their excess cash flow and stick it into increased exploration and production.
That's right. Because when you do that now, your whole service industry has been eviscerated. So if you decide that you suddenly want to grow, you're going to be chasing services, you're going to pay up inflationary costs, you're going to deteriorate your financial metrics on which you are now trading. Right? Your financial metrics have to stay strong. So that's your first concern as a management. That takes time to change. I think we need time to build out the service capacity to grow. And then you need time to change these companies' setup. So that's a year and a half, 2 years away.
And what happened to OPEC's spare capacity? I think it surprises a lot of people that the giant of the oil world, Saudi Arabia, and by extension OPEC, has lost the ability to increase production to affect the market in a way that would calm prices down or even reduce them.
You know what? They have grown their supply back up all the way to their max capacity level over the last year and a half, right? They took a lot of oil off the market during COVID when demand collapsed. And then they very gradually brought that supply of theirs back. Within OPEC, there are 3 or 4 who could theoretically expand their capacity, but they have frankly not chosen to do that in the last 3 years for pretty good reasons. Now it's going to take them time as well to grow their capacity. But the short answer is they grew to the level of capacity that they had. And that level of capacity wasn't as high as many people thought.
And for many consumers, of course, high crude oil prices translate to high gasoline prices. That's what they really watch. And you're not very optimistic there. You don't have good news there. You see gasoline prices rising, if I understand correctly, significantly from where they are now.
Yeah, that goes with crude oil, right? I mean, I remember being on your program maybe 2 weeks or so ago, and there were these headlines like, oh, dang, you know, this oil, gasoline price is going through $2 in Canada. Fair. Now we are $10 crude oil higher. Gasoline margins themselves are rising because we short refining capacity. So gasoline is going to get scarcer from here. And, you know, if things develop as we think they will through the summer, you may end up with gasoline prices closer to 3 than to 2 by August.
There seems no end in sight to the Russian attack on Ukraine, the war in Ukraine. The most recent news is that Ukraine appears to have lost the battle for Mariupol in eastern Ukraine. What if the world gets the news that it desperately wants to hear, and that is that there is a path forward towards peace in Ukraine?
That would be, my humble opinion, very, very bullish. It would be great, obviously, to avoid further bloodshed, first and foremost. It would come with embargoes on Russian oil. The European Union is negotiating those things out. Russia will be put in the penalty box. Its production will therefore continue to decline, but demand will pick up. You will then have the certainty that things don't get any worse. That means that Europe can dig itself back out of the hole that it's currently in. That means that the rest of the world is less worried. That means that one big area of uncertainty would be removed. I think that's bullish, everything, including oil demand.
You see the bans on Russian oil and Russian natural gas persisting longer term, even if we get peace in Ukraine.
Yes, the Europeans have said as much, right? Ursula von der Leyen was quite clear about that. She wants to see every last Russian with a gun gone from the Ukraine, including the Crimea. That's going to take a while.
Okay, Jan Stuart, thanks as always for the insight. He's global energy strategist at Piper Sandler, joining us on his outlook on oil and gasoline prices. He says both commodities moving higher.